What's up traders, Tom here with another video. Today we'll be discussing market sentiment. Sentiment is something you must understand when you trade or invest in anything. Remember Warren Buffett's famous quote, "Be fearful when others are greedy and greedy when others are fearful." So let's take a look at how you can take advantage of that in the future. Stay tuned. Before we get started today, I just want to let viewers know that no matter when you're watching this video, these concepts will still apply. And while we're going to use some examples as of now, I don't think any of these things will change in the future. In this video, we'll be covering several different sentiment indicators and reports that you can easily get as a trader or investor. We'll also look at what I believe to be the best types of reports and why they are best. I would also just like to remind everybody that if you've been enjoying our content, make sure to subscribe, support the channel, hit the bell, like the video, and of course, comment down below with what your current sentiment is in the markets. I would also like to just remind everybody that we have a free investing and trading public Discord in the links down below that you can join and get involved in the greater trading community. And it's been great to see hundreds and hundreds of people come through from this YouTube channel and our previous works and join and discuss today. So we'll start today's video by talking about the fear and greed index. What emotion is currently driving the market now, it says up the top here. And it's not a bad thing because it collates quite a lot of different information. So right now we are sitting on greed. It looks like the previous close was greed. We are sitting at 62 greed. We are not at extreme greed yet, but we can see that it's gone from fearful to neutral to greedy. And that's where we are right now in terms of all of these different reasons to be in there. So one of their indicators is safe haven demand. I definitely think it's valid and certainly something you could look at. The next one is PutCall options ratios. We'll be talking about that further in the video, but that is one that I would look at. The stock price breadth volume indicator, it's pretty good. Again, I don't think it's strong enough in terms of you using it for investment. Market volatility, or the VIX, we will be talking about that some more. Junk bond demand, you can almost write that off now considering what the Fed has done, but it is now neutral instead of fearful, and that is because, of course, what the Fed has done. Stock price strength in general, well, that of course will go up as the market goes up, and market momentum. That's fine as well. What I like though is actually this little chart down the bottom here where it shows fear and greed over time by this particular indicator. So I just want to highlight and point out arrows down here in terms of where it goes down to the 20. So whenever you're talking about long-term investment, let's say you were a saver and you've been saving $20,000 and you want to invest that $20,000 and you wonder when. Well, one of the best ways to do investment over the longer term is to buy dips. Everyone's aware of that. Why not just buy the dip? It's very popular to buy indices like the S&P 500 or NASDAQ if you don't want to be a stock picker. And buying the dip can be one of the best ways to get into the markets. So what if you could use sentiment or when extreme fear comes into the market to show you periods that you might want to look at investments? Well, here it turns out that during 2018, 2019, 2020, there were dips in the markets. It may not seem like that now, but there were dips. And at all of these points, this particular fear and greed over time went under the 20 barrier and then, of course, spiked up. So you might set like a level. Maybe you want to see 15 on this index. And whenever it's under 15, you are going to start looking at the market for investment. It is actually a super simple but super valid concept that you can use in the future. But of course, let's unlock more potential about this sentiment idea. Well, the first one here is S&P 500 put-call ratios. I've been mentioning them a little bit, and I believe firmly that when people don't believe something's going to happen, it generally does. Right now, we are still looking at, well, I thought yesterday we might be looking at slightly lower put-call ratios, but you want to see it happen a few days in a row. So last night it spiked back up to 1.76, and the closer this number gets to 1, the more likely it is that everyone in the market has bullish sentiment. So the closer this number is to 1, the more bullish the market is, And that usually means that you should be worried about the market because everybody is on the same page. Remember, it takes two to tango. You need the buyers and you need the sellers. The bears and the bulls, you need them both. You need the opposite opinions at all times, especially now with what we're seeing in the markets. What about US investor sentiment? That's another thing you can get from this ycharts.com. I don't think this one's as useful. It does show you sentiment over time, but I don't know as a trader or an investor how you would use this. In my personal opinion, this is not good enough as an investment tool, so we will skip over that one. What about the VIX? Well, the VIX certainly is worthwhile noting when it comes to investments. Obviously, the higher the VIX is, or the fear index is, then you will be seeing greater volatility. And you need to be aware of that from a psychological standpoint. If you enter the market at an 80 VIX, you are going to have to expect every single day you might be seeing between 5 and 10% movements in your stock. It's just that wild. We are obviously looking at it much lower than right now, but it has hit the 200 moving average on the daily. It's hovering between this kind of 25 and 30 zone. And in general, there's still a lot of volatility in the market, and you must be aware of that, as the all-time average is much, much lower, with price generally ranging between kind of 12 and 18 to 20. So still much higher than average. And that means that at any time, a switch can be flicked and we will see increased volatility in the market. What about another sentiment indicator? The Bullish Percentage Index. Can this be used for a trader or investor to potentially get in? I think it can, but again, it's about setting tolerances. So maybe your tolerance on this index is that you don't want to enter unless the index falls under 20. Now notice here that during the last two pullbacks, the pullback into 19 and the pullback into, of course, this current crisis, both went under 20. But by using 20 as your barrier, you weren't trapped with this idea of course, getting in at 24 and not hitting the bottom. Now, are you going to get 13? Probably not. Are you going to get 2? Probably not. But you're never going to be able to pick the absolute bottoms. If you could, you would be an absolute genius. You have to take the averages. One thing that no one thinks about in stock markets is that stock markets are not rigged, but they're definitely set to go up over time. Whenever you consider inflation, you consider anything about economies, growth, the money system, however you want to look at it, stock markets are built to go up over time. It's important to have bullish sentiment for most of the time, and maybe 10% of the time you don't have bullish sentiment, because one thing we know about cycles is they last for around 8 to 10 years. There's usually a pullback in a cycle, and then we get another 8 to 10 year run. And that's just what's happened throughout history. And it's worth being a bull rather than a bear over the longer term. So why am I making this video today? Well, obviously we have incredible movements in the markets, incredible V-shaped recoveries in the NASDAQ. The S&P 500 is continuing to make highs. So what are we seeing in sentiment, and what's going to cause it to go down, or what's going to cause it to continue going up? Well, I've talked about this a lot on the channel, but let's go into some other things. Now, I'm actually going to talk about Forex for a minute. I haven't done that too much on this channel since we've got this huge amount of subscribers, but Forex was one of the things, and still one of the things, that we believe is actually a really good trading kind of tool for people to learn markets and to people learn about sentiment. So it's pretty well known that a lot of people lose money, of course, trading in Forex, and there's all sorts of reasons why that happens. Okay, so what have we got here? Well, we have a whole bunch of different currencies. Now, many people be aware that at this stage, the ECB's come out and created full-on stimulus. What are the general retail herd doing though? What is the general kind of sentiment on the Pepperstone platform? Well, if we have a look here, it certainly does not look very bullish. Look at this Euro US dollar, 29.7% along, and the rest of them, about 70% plus, are short. So what is the currency doing? Well, of course, it's going long. Most people are losing because they are fighting the trend. You should not fight the trend in general. If you fight the trend, you will lose. So I always find this really interesting. Whenever you're looking at price action or you're looking at breaks of resistance or support, there was an incredible break here of resistance. Even if you're not a technical trader, I think everyone can agree that price was trapped in this range. The price broke out, and that brought bullish momentum. And was there a fundamental reason for that? Sure, there was, but the price showed you it as well. Then people fight that urge to buy. They don't want to buy, they want to sell because they believe the price could get back down to the lows or even lower because that's what happened before. Things change in the market. You have to be adaptive, and Forex does teach you that. So the reason I wanted to bring everyone into this sentiment indicator is that it doesn't matter which particular currency you're looking at, whatever direction it's going in the trend, you will find the sentiment of the retail herd is opposite to that. Let's take a look at US dollar yen. Well, US dollar yen, amazing resistance break. Again, what happened to the sentiment in this particular currency? Well, if we load up the sentiment indicator, what we'll notice is that the yen, again, only 36% of people are long and the rest of the people trading right now are short. So it shows the retail herd does not have any idea on how to trade this particular currency, because you should never be short all the way through this. And I can tell you at one stage, it was 80% of people were short in this area here. So around this area here, 80% of people were short. And of course, only 20% of people were long. So this same kind of theory can be applied to the markets. So let's just take a look here. Here we've got an IG client sentiment report. Well, it turns out that net long, only 23% of people are trading CFDs long, and short 77%. So if they're all shorting and the stock market likes taking money off people and it won't ever turn until the sentiment changes, you really need to see this long short change. And I think when I'm coming down to here is that whatever, unfortunately, the least sophisticated investors do, which is the retail herd, there's no doubt, generally the market will do the opposite, because again, someone has to win, someone has to lose. There are contrarian investors that can do well over time, but realistically, you're better off following what Wall Street is telling you to do. And that is very important. So a lot of people ask us, well, how are we going to also recognize trend or recognize any of those things? If you don't understand price action and you want to use maybe moving averages as a sentiment indicator, it shows you what's happening. Another thing that's good about moving averages, if you use the 20 EMA, you can notice that when big aggressive moves happen in the stock market, like happened here with the Apple on the daily, when it pulls back to the 20, you get the opportunity to potentially buy at a slightly cheaper price than you would have otherwise. If you want to hold Apple long term, it could give you the opportunity. Obviously, sometimes you get better opportunities like recently, but generally, if you want to get involved in an aggressive move, moving averages can help you with not only defining sentiment, but also defining entry opportunity. And more on this in the channel. So make sure you subscribe and hit the bell to learn more about these things in the future. We will be covering them. What about commitment of traders COT charts? I hear a lot of people talk about these all the time. Are they useful? Well, here's the reason they're pretty much not. The Commitment of Traders COT report provides a breakdown of each Tuesday's open interest for markets in which 20 or more traders hold positions equal to the above reports, etc., etc. The charts are updated each Friday at 3 p.m. It's a delayed statistic. It comes out to you a little bit too late. Can you look at them? Sure. Will it help you? I don't think it's as good as the other reports. So they're cool, and you can check out barchart.com to get the Commitment of Traders reports and have a look over them. And it's worth exploring. But I think the other indicators are a little bit better. Remember, we talked about just having a defined plan, using that kind of sentiment, and when others are fearful, you can get greedy, and you can do that time and time and time again. So to summarize today, which one of these indicators I think is best, it's probably going to be a mixture of a few of them. CNN, definitely look at this one when it's under 20, worthwhile looking at. The PutCall ratios, when they're low and you're seeing an extremely high market, that's when you should be the most fearful, like Buffett would say, about what the market is doing. The VIX is great, but the VIX will show you spikes and it won't necessarily show you where we're at with the market. As we saw recently, 80 is super high. Did we think 80 was going to happen? No. So the VIX isn't going to help us as much there. And the best one is probably still going to be consumer sentiment from the retail side. If you're trading Forex and you see a breakout in the direction up and everyone else is selling, and that's the retail crowd, you should be very happy because they're unfortunately losing, but you're going with where the big money is and going with that flow. So very important to think about. If you like this video today, make sure to subscribe and hit the bell. Of course, give us a like, comment down below with your current market sentiment, and let us know which one of these you like the most. And of course, we're looking forward to hitting 10,000 and we love everybody's support. So hit us up in the Discord, come and join the community, and we'll see you in the next video. Thanks everybody, and happy trading. Bye.